The adjusted trial balance. So as I explained, the unadjusted trial balance is the list of accounts before adjusting entries are recorded. So the unadjusted trial balance just shows the debits and credits that have come about due to regular journal entries throughout the month. Then the adjusted trial balance takes into account the adjusting entries. So any of those adjustments to the account balances will then be shown and reflected on the adjusted trial balance. This slide shows a larger image of the trial balance that I explained on the accounting cycle slide. So as you can see, we have all the accounts listed here. This is essentially all the accounts that show up in the chart of accounts and in that same order. So there is a reason that they're listed in this order. They're listed in the order of assets, liabilities, equity, and then revenues and expenses. So what you see in the first two columns represent the unadjusted trial balance. So these are the final debit and credit balances after all journal entries are prepared, regular journal entries. Then remember, we do have to prepare some adjusting entries. So those are shown in the adjustment columns. Notice that there are letters here that show the corresponding debits and credits for an adjusting entry. So all of these match. So you can see what the debit in a journal entry was and what the credit was in the adjusting entries. So then you'll take the unadjusted trial balance amounts, add or subtract any adjustments, and that will give you the adjusted trial balance. And these are the numbers that we use to prepare the financial statements. So now looking at preparing the financial statements. There's a certain order that we prepare the financial statements, and I'll explain that in just a moment. But this is showing, again, taken from the spreadsheet that you saw just a minute ago, an actual adjusted trial balance prepared. So again, you can see how the accounts are shown in the list of the chart of accounts as assets, liabilities, equity, and then revenues and expenses. So these are the steps to preparing the financial statements, and like I mentioned, they're done in a specific order. So the very first thing you do once you have your adjusted trial balance is prepare the income statement. Your income statement is going to be revenues minus expenses. What that gives you is net income. You have to have the net income before you can move to step 2, which is the statement of retained earnings. The statement of retained earnings basically shows beginning retained earnings, any additions or subtractions. So this is where we will add net income or subtract a net loss. You'll subtract out dividends, and then that will give you the ending retained earnings balance. So you're looking for that ending retained earnings balance, which is equity that you have to move forward to the balance sheet. Remember, the balance sheet shows assets, liabilities, and equity, which is the retained earnings. So you have to prepare the statement of retained earnings before you can move on to the balance sheet. And then finally, you prepare a statement of cash flows, which we don't really talk about in this chapter. So primarily, you need to remember that it's the income statement, then the statement of retained earnings, and then the balance sheet. So when we prepare the income statement, we look at the adjusted trial balance. Again, this is the same one that we've looked at several times so far. Remember, we're showing assets, liabilities, equity, and then here we show the revenues and expenses. So what we do with the revenues and expenses from the adjusted trial balance, we take those amounts and we use them here. So as you can see, we're basically just taking this part of the adjusted trial balance and using it for our income statement. The only thing that's different here is that instead of just listing the balances, we total the amount of revenues, we total the expenses, subtract revenues minus expenses, and that gives us the net income. Remember, we have to have the net income calculated in order to move on to the statement of retained earnings. So now with the statement of retained earnings, this is primarily a statement of equity. So remember, retained earnings is an equity balance. So we look at our adjusted trial balance and we look at the equity accounts. So primarily we're looking at retained earnings and dividends. So this is where I'm just reminding you of what the income statement looks like that we've already prepared. Remember, we calculated the net income here. We have to bring the net income from the income statement into the statement of retained earnings, since net income affects retained earnings. But just to look at how the statement of retained earnings is prepared, you take the beginning retained earnings balance. In this situation, it was 0, maybe it was a startup company. Then you add in net income and subtract out dividends. Net income is an addition to retained earnings. Dividends are a subtraction. And so then that gives you the ending retained earnings balance. Remember, you have to have the ending retained earnings balance, since it's equity, to prepare the balance sheet. Next, you prepare the balance sheet, which shows the assets, liabilities, and equity accounts. So from the same adjusted trial balance that we've been working from, you pull the assets and liabilities. So you have your asset accounts here. They move over to the asset section of the balance sheet. Your liabilities are then moved to the liabilities section of the balance sheet. And equity, in this case, what shows on the balance sheet will be your common stock. That's an equity account. And the balance for retained earnings that we calculated in the statement of retained earnings. So those are the two items that you see in the equity section of the balance sheet. The reason that it's called a balance sheet is because you want to make sure that assets equal liabilities plus equity. As you can see here, this is the total asset amount. And when you add total liabilities plus total equity, you come to the same balance for liabilities plus equity.